So according to Jerome Powell, inflation is too damn high. I guess at some point it's not shocking to hear that Powell finally catches up to the rest of the world. He's only like a year and a half behind everybody else. But hey, better late than never. But this is Powell's style, you know. He's always acting like 9 months behind the zeitgeist. And that doesn't mean that he's even, right in doing so. He's just saying, he's just saying what everybody else was saying 9 months before. And so now all of a sudden Powell's decided, yeah, you know what, inflation actually is a problem. It's no longer transitory, and we may have to raise rates even faster than we had previously, meaning these 25 basis point rate hikes, 0.25%, maybe we're going to have to move at a little bit of a faster pace than that. Maybe we'll move at 50 basis points, which always was ridiculously slow anyway, but that's what the Fed used to do, like back in the Greenspan and the early Bernanke era. And so this is quickly becoming the dominant narrative at the Fed was that, well, we're going to have to start hiking by 50 basis point rates, or 50 basis point jumps at a time. And Powell himself said, you know what, maybe we'll even raise interest rates above neutral, which is a fancy way of saying the Fed is going to, in their mind, not have an accommodating monetary policy. Because remember, the Fed isn't anywhere near sort of net tightening. They're still net loose, at least, in the Fed's eyes. And even, net tightening in the Fed's eyes, net constraint on the economy, it's arguable whether that really means what they think it means anyway. And there's a lot of factors that go into that. There's some people who say, well, the Fed just doesn't really control interest rates that strongly, and so it's it's arrogant of them to think that they can be accommodative or restrictive when it comes to capital markets or credit markets. And then other people who say, well, the Fed is much more accommodative than they let on. And frankly, I don't want to get into the debate between the two, but suffice it to say, the Fed's version of events is not accurate. And so when Powell says, we may even raise interest rates above the neutral rate, that is definitely not the case. The Fed will never do that. The neutral rate of interest, i.e. the natural rate of interest, is whatever interest rates would be in the absence of so-called monetary policy, in the absence of government manipulation of the money supply. And considering that we live in a society with extremely high time preference, where people don't save their money, the natural rate of interest should be quite high, because savings are quite scarce. You have everybody wanting to borrow money, and now a lot of people who would lend money. The only reason why interest rates are so low is because there's this massive surplus of money to be lent out because of Fed policy and because of the structure of our banking system. I don't really want to say which one plays bigger or smaller role, but I think very easily the natural rate of interest in America today could be double digits. The Fed is not going to have set the Fed funds rate above 10%, above 15%, up to 20%. Powell is no Volcker. He doesn't have the wherewithal to go that far. Even if Powell acted like he was Volcker for a couple of months and started hiking, once we get to certainly a 20% decline in the S&P 500 or a 20% decline even in like the NASDAQ. Actually, I think we already hit a 20% decline in the NASDAQ. Well, either way, let's say you get to 20% decline in the S&P. I hope I'm wrong, but Powell so far has shown that that's his breaking point. That's when he flip-flops. He will not tolerate a bear market on his watch. Under Jerome the Bull, stocks only move in one direction, and that's up, straight up. No speed bumps, no dips. The only dips are when people sell to try and take some profit on their leveraged long positions. That's the way you look at it. It's a good kind of selling. People selling because they're up, not people selling because they're down. And then when there's a slight dip, you buy that dip because, of course, over a period of, a month, 2 months, 3 months, a year, stocks will always go up because Jerome the Bull says that they must. Right now, he's basically saying the opposite. He's saying inflation's way too high. We're going to have to hike more than we think. We should basically accelerate balance sheet runoff. That means accelerating QT. And all of that is kryptonite for financial markets, which in turn is kryptonite for domestic consumer spending. Which, let's be honest, that's really what the Fed theoretically is trying to do, is kill consumption. Because the whole reason, the whole justification for the Fed blowing this massive stock bubble was to get people to consume, because remember, that is our purpose as Americans. That's our highest calling. Remember after 9/11, when George W. Bush was asked from a reporter, what should Americans do who are concerned for their country? Should they go out and volunteer to help the poor and work at a soup kitchen or something? Or, could they, give money to some charity that helps the families of veterans killed in action? No. What George W. Bush said was go shopping, because our highest calling as Americans is to consume. For those of you who don't remember, or who were, not old enough, look it up. George W. Bush said this. What should Americans do who are concerned for their country? He said, go shopping. And what's going on right now is that the Fed has, since 2008, been propping up the stock market to make Americans feel rich so that they would go out and spend as much money as possible, so that they would feel financially secure enough to consume as much as they possibly could. Every week, they spend their entire paycheck because they know, I got this big fat 401k that I'm sitting on. I'm set for retirement. Come age, 65 or 68 or 70, whenever I decide to retire, I'm going to be set for life. And so I can spend my entire paycheck every week. I can buy, the biggest house that the bank will allow me to qualify for. I'm going to get every single option available from the dealership on my new truck. I'm going to spend 6 figures on a pickup truck to pull my trailer to my to my drywall jobs. Largely because the Fed makes people feel rich by inflating the price of their assets. Well, then in turn, all of that consumption, fueled by money printing, fueled by government deficit spending, which is monetized by the Fed, creates inflation, because that's the transmission mechanism by which newly created money enters into the economy. And even though we don't have a good measure, really, for the true money supply, we can surmise, because of a lot of factors, that, money supply seems to be going up. That's, that's what the evidence dictates. Can we prove that definitively? Can we count how much money really is out there in the world? How many dollars? No. But I got a hunch that it's going higher. And so what the Fed is trying to do now is, instead of expanding that, they want to try and contract, or at least don't stop the acceleration of the expansion of the money supply. Slow down the expansion of the money supply in order to deter all of that consumption, which has been bidding up prices. They want to stop increasing, nominal purchasing power. And in order to do so, they have to crash asset prices. They have to tell people, hey, you know what? You're not as rich as you thought you were. We tricked you, and now we're going to have to reveal the truth to you that really there's a scarce amount of resources. And although we've created more dollars and put them into your pocket, we didn't create more resources for you to consume. We're all competing for the same amount of resources. We just have more money to bid up those prices, with each other. Prices have increased, but the amount of stuff, if anything, is growing at a rate slower than it traditionally has over the past few years. Even if the absolute quantity of stuff to be consumed in the American economy has increased over the last couple of years, our nominal purchasing power has increased much more, and this is what leads to consumer price inflation. But will Powell and the Fed really be able to stomach the decline in asset prices, the reversal of this policy that they worked so hard for so long to advance, 14 years now, since 2008? It's hard to believe that they will, but I can hope. I don't have any confidence in them at all, but I can hope. I guess it's somewhat a good sign that, stocks have been down for quite a while, and Powell is still willing to talk this way. Of course, I don't believe we're down 20% on the S&P yet. I'll have to check exactly where we're at. I've not been following it week to week in quite some time. But I will certainly do an update when we are 20% down. And boy, wouldn't that look stupid if we're 20% down right now, since I keep highlighting that number. But I don't think we are on the S&P, so I will check that. I will do an update at the very least. I'm sure I'll talk about this more before then. But when we get to 20%, I will do an episode just on that and say, hey, here we are. This is a turning point. Is Powell going to continue down the road of trying to actually fight inflation? Because again, what his battle so far with inflation is totally pathetic. It's anemic, a 0.25% hike. But that's still big by Powell standards. And a 50 basis point hike, that's almost unthinkable. But the Fed's thinking about it, so they say. Now, it might just be the threat. They're trying to use the threat in order to tame inflation. I don't think that'll work. As of right now, I'm still expecting a flip-flop before their policies have had a chance to have much effect. Because here's the thing: you have to tank the stock market in order, to bring down inflation. If there's any truth at all to what the Fed has been doing for all these years, the Fed's policy has been to try and generate inflation, which I don't think is a good idea, but the Fed thinks it's a good idea. Now they finally succeeded in it, and they're saying, well, inflation's too high, so we got to bring that down. Well, the only way to bring that down is to undo everything that they've done to stimulate inflation, which is deflate asset prices. That's what must be done. Housing prices have to crash, stock prices have to crash, bond prices have to crash. That's all there is to it. It certainly doesn't look like we're going to have any help in the inflation fight from the supply side. It doesn't look like we're going to have a huge, surge in production of goods for the American market. If anything, goods production and importation is threatened right now more than ever, because the situation with Russia is spilling over into China and India. And if you notice, not everything that you buy these days is made in China. Some of those things are starting to be made in India. So things are not looking good. But with that said, I will try and keep you all up to date, and I will see you folks back here tomorrow.